Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of FibroGen, a company that sounds like it should be making your mattresses, but actually deals in medicine. We'll be dissecting their latest filing, which, spoiler alert, includes some changes to how they run their meetings. It's not as boring as it sounds because even the smallest tweaks in corporate rules can have a big impact on who's really in control. This report is like a quick update, an 8K filing. Companies use these to tell the Securities and Exchange Commission, the SEC, and by extension us, about important things that have just happened. This one was filed because FibroGen changed some of its internal rules, specifically its bylaws. Bylaws are the rules of the game inside a company, setting out how everything from meetings to votes should be run. Here's the heart of the matter. On April 2025, FibroGen changed its bylaws. Specifically, this change affects how many stockholders or shareholders need to be present at a meeting for the company to actually do business. That number is called a quorum. Before, a majority, meaning more than half, of the shares needed to be present to make decisions. Now, only 1/3 of the shares need to be present either in person, via the internet, or by someone voting on their behalf. This makes it easier to hold meetings and pass resolutions because it's harder for shareholders to block the company's plans by simply not showing up. If a specific group of shareholders, like those holding a certain type of stock, need to vote on something, the same 1/3 rule applies to them. If you want to dig into the specifics, you can find the full text of the updated bylaws as Exhibit 3.1. Now, what does this all mean? Well, it's about control. By lowering the quorum requirement, FibroGen's management team has made it easier to get things done, even if some shareholders don't agree. It's a way to streamline decision-making and reduce the risk of shareholder holdouts blocking important initiatives. Imagine trying to get everyone in a room to agree on pizza toppings. Now, imagine you only need 1/3 of the room to be present. You can ram through your terrible pineapple idea much easier. So what are we left with? A company making internal tweaks that could shift the balance of power. Is this good or bad? It depends on your perspective. Management will likely argue it's about efficiency and progress. Some shareholders might worry it's about silencing dissent and pushing through unpopular decisions. FibroGen seems to be setting itself up for smoother sailing when it comes to corporate governance. Whether that translates to better results for shareholders remains to be seen. Keep an eye on this company. These little changes can sometimes signal bigger shifts ahead. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and let me know what other filings you'd like me to decode in the comments below.